the recording. We're going to record this session, and so we'll make it available to everyone by link. But we've been getting more and more comfortable with the Teams platform. I actually really like it. I think it's a great way for us to stay connected and to be able to see each other virtually and to also do webinars. So, we're getting much better at it. So again, welcome to our June partner meeting and appreciate all of you joining us this morning. I wanted to start off by first thanking all of you for what you're doing every day to help small businesses to survive and recover and to get through this. You're on the front lines. You're working with the small businesses one-on-one. And I can't thank you all enough for everything that you do and your partnership and support. It sounds cliche and I say it over and over again, but I absolutely mean it. The Massachusetts Small Business Team, which is the SBA, and our resource partners, we really are a dynamic group, and I am blessed to have all of you as part of our team and our partnership, and together with the SBA District Office staff. So did want to start off by just welcoming 3 new employees that SBA has brought on within the last couple weeks. And so the first person that joined us a couple weeks ago is Madison Jones. She's a program support assistant. She just recently graduated from Connecticut College, and she is a Surge employee and is with us on a term appointment, but she'll be helping everyone in the district office with support activities. But it's wonderful to have Madison as part of the team. So Madison, do you want to just say a very quick hi to all of the SBA resource partners that we have on the call? And so we have SCORE mentors, we have Massachusetts Small Business Development Center advisors and regional directors. We also have Center for Women in Enterprise staff. So you have the full team here with us this morning. So Madison, say a quick hi to folks.
Hi, everybody. Nice to be on this call with you all. And thanks, Bob, for such a nice introduction.
Perfect. So the next person that we have is Caroline Williams. And Caroline joined us a little bit more than a week ago. Caroline relocated up from Florida, living here in Boston, but Caroline is a permanent addition to our staff, and she's an outreach and marketing specialist, and she's also going to be helping us with administrative officer duties. So, but Caroline most recently worked for the library in Jacksonville, Florida. Really great background with outreach and marketing and putting on programs at the library and flyers and marketing. But Caroline, say a quick hi to all of our partners.
Hello, everyone. I'm glad to be here. I can't wait to meet a lot of you guys in person. Yeah, thanks for having me. I'm excited to get started.
Cool. Thank you. And the third person, I know that she was anticipating being a little late, so I'm not sure whether she's on yet, but the third hire that we have is Diane Darling, and she might be a name that many of you know. Diane is one of our Surge employees. She's a term appointment. Diane is an author, a public speaker, went around the country, doing marketing and networking events, but she's going to be a tremendous asset to all of us. And but she's certainly a good resource for all of you to work with. And with the help of Diane, looking for us to do some big impactful events, and we'll be working with our partners to pull some of these things off and using the technologies that are available to us. But yeah, you'll get to hear from Diane in just a little bit, but wanted to get into just as far as the status of the SBA district office. We have released a reconstitution plan to all employees. It just went out yesterday. or today. But what we're doing right now and the status for the near term is still 100% telework. But we do have some folks that go into the district office periodically, but for all intents and purposes, we are 100% remote and telework, and that will be our status for the near future. We're in the process of getting the district office deep cleaned. That's taking place on Friday. We're getting a bunch of PPE equipment delivered to the office. And again, we have to work through this reconstitution plan as far as how we're going to operate within the district office space and interacting with each other and with clients. But right now, the O'Neill Federal Building is still closed to the public, and that's the status for a couple more weeks anyway. But I wanted to. I'm going to shift over to the slide deck that Eli put together, and so wanted to talk about our PPP activity. And so nationally, there have been over 4.4 million approvals by all accounts. This is historic. Over $511 billion in loan approvals, with just about all of those loans being dispersed by this point in time. And so this is absolutely helping small businesses to survive and recover. And what we've seen with PPP round 2 is lower size loans, loans going to small businesses, a lot of sole proprietors applying for these loans. You can see by this screen that the predominant range of loans is $50,000 or less. And so again, this is really good news. But as far as in Massachusetts, and this data is as of May 23rd, we're talking 106,000 PPP approvals in Massachusetts for over $14 billion. And again, any way you look at it, this is historic. Typically in a given year in Massachusetts, we would do 1,700 loans. We're talking about 106,000 approvals in the matter of weeks. So I know that small businesses have received a significant amount of PPP loans. And what all of you should know is that PPP funding and appropriations, it's still available. We have lenders who are accepting applications from new small businesses. They don't have to be existing customers. SBA did just put out a press release a couple days ago as far as a carve out for CDFIs, and at this point in time, there's $6.8 billion for CDFIs exclusively for them, in order for them to lend to underserved communities and the communities in which they operate. So, luckily we have a number of CDFIs in Massachusetts that are doing PPP loans, whether it's up in the Berkshires or here in Boston, and certainly in between. So we're continuing to reach out to CDFIs who don't have PPP agreements with us to see whether we can entertain them applying to become a PPP lender. So that's something that we're working on also. But just want to talk quickly about economic injury disaster loans. So we've seen a tremendous surge in EIDL loan approvals over the last week and a half. We're averaging currently 500 to 700 approvals a day. Over the weekend, we actually saw 1,189 approvals in one day. And this is good news, because a lot of these small businesses, they applied for economic injury loans, when Massachusetts first got its declaration on March 18th. They've been patiently waiting for these approvals, and EIDL is different than PPP. They're two separate programs. The money is used for different purposes, different terms, and so we're well over 10,000 approvals. We might be at 11,000 or 12,000 at this point in time. But the other thing on the EIDL loan advances, which are up to $1,000 per employee, up to $10,000 max. In Massachusetts, we've had over 66,000 EIDL advances for over $777 million. So this is good news, and small businesses are getting the capital that they need. But on idle loans, what everyone should know, if you have not heard already, is SBA did put out 2 FAQs that idle loans, technically they go up to $2 million, but SBA put out a FAQ that in order to be able to serve as many people as possible, we've heard numbers about 5 million applications. SBA has made the difficult decision that it's had to reduce the loan amounts. And so small businesses that were expecting larger idle loans are seeing much smaller loans, and we're seeing loan approvals just going up to $150,000. And SBA has also put out a FAQ that it does not anticipate being able to approve increases to idle loans, but we'll have to see what appropriations might come down the pike and what changes SBA might make. But I thought that was important information for all of you to know, as far as the customers that are coming to you, that they still haven't heard of their idle loan, they haven't received their idle advance. Those continue to go out. And again, we're seeing significant amount of approvals. So this session is really intended to try to be a train the trainer session, where we talk about the PPP program and the forgiveness aspect of it. And so I'm going to turn it over to Eli Spahiu, who is our lead lender relations specialist. And Eli put this presentation for us together so that we could have it this morning. So Eli, I'll turn it over to you so that you can go through the slide deck.
All right, wonderful. Thank you, Bob, and thank you to all of our partners. I just want to echo what Bob mentioned. We are truly grateful to you for everything you do. You are the front line, and the information we're going to share with you today is really, you're no strangers to it. You've been working with, the various forms and the various IFRs that came out at different times, and I'm sure some have a different level of expertise than others, but we're just hoping to provide some tricks and tips for everybody based on the information currently available, fully knowing that this is subject to change. And as you all know, there's proposed legislation already in the works to make some changes on the forgiveness component of the program. So we're basing everything on the information we currently have available, the guidance that is, in black and white at this time, and we're not going to speculate with the what if scenarios. Okay, so keep that in mind. I did update the PowerPoint as early as 9 a.m. and in hopes of getting some updated numbers. And fascinating enough, as soon as I send it out, and now I check again the website, data as of 5:30 is available, Bob. So go figure.
No big deal. We're all good.
So, nevertheless, the one thing that I do want to point out with this new data, and it's all available on the Treasury's website for now, and I'm sure they're going to update the SBA site shortly. But this is the first time that I do see how they've broken it down by industries, by NAICS specific sectors. So that's good information to know. So highly recommend everybody to go to the Treasury's website and take a look at that if you're, you really like numbers as much as I do. So that I find that stuff interesting, and I get excited when I talk about numbers. So, but let's stay to the, to the program today. Paycheck Protection Program specific. Again, as you all know, this program was intended to basically provide a protection for payroll costs. So payroll costs are the amount of the loan that's going to drive the forgiveness portion of the loan. Okay, so the loan will be fully forgiven if it's used for the purpose intended, and obviously all the covered expenses, including interest on mortgages, rent, utilities, and basically, borrowers fill out, the proper documentation, provide the proper, supporting evidence of payments made, incurred and paid within the covered period. So those are some of the things that we do want to cover here. There's a couple of IFRs that came out on the 22nd of May, and I'm sure that you are familiar with that information, but for the most part, that's the information that I designed this presentation on. So looking through, Bob, we can go to the next slide. I think this is common information that everybody, is familiar with. So as far as forgiveness itself, right, or I should say, as far as first things first, I guess. As far as eligibility goes, just to bring everybody on the same level here. Any business that's eligible for a 7A loan is eligible for a PPP loan. Okay, the bigger requirement here is that the business has 500 employees or less, okay, and they meet size standards for the primary NAICS code. So what we have here for-profit businesses, you could use either the size standard for the NAICS code, the primary industry in which they operate, or the alternative size standard, okay? The only exception was made for accommodation and food service industries, so NAICS code starting with a 7.2. So that exception was 500 employees per location. And obviously that makes a big difference. So nonprofits, this is again part of the exception to the rule. 501c3s and 501c19s, okay, are the exception to the rule here. Obviously, not-for-profit businesses, the religious organizations are also the exception to the rule. And not that this is an exception, but sole props, independent contractors, and self-employed individuals, there's a different set of rules applicable to this types of businesses. Well, we can move on to the next one. So the information that most of you are familiar with is the application form, Form 2483, and that's a fairly easy, document. I would say it truly is only a 4-page document. The last 2 pages are the instructions, pretty straightforward. For the most part, as you saw in the numbers, we have, we've done a good number of these applications. Borrowers, not all sophisticated, but for the most part, we're able to figure out with your help and some on their own, some with their CPA's assistance, the application form, which is truly, the easier of the two, documents that they need to fill out. So the loan forgiveness application form 3508, that's a whole different beast, in my opinion. So 11-page documents, lots of instructions. The way it was designed was a little backwards, as you probably know. So the calculation form is really the last step in the process. Schedule A does the brunt of the work, but the magic really happens on worksheet A as far as figuring out payroll costs. So for most of you, those are the forms you need to to be familiar with, the steps in those forms. And obviously, as you work with small businesses, just hammer home the point that documentation is required. Not all of it needs to be submitted. Some of it can be retained in their files. Some of it needs to be retained for 6 years, for a 6-year period after the loan is forgiven. So make sure that you familiarize yourself with both the 3508 form as well as the IFR, the interim final rule on loan forgiveness, which was published on May 22nd, okay, 2 Fridays ago. So demographic info is obviously an optional section, but SBA loves that information, so we highly recommend with those borrowers that you work with that information is provided. So we can move on to the next slide.
Sure. If I can just add one comment.
Sure.
So we were on a training call last Friday, and the presenter shared something which I think was really good advice. If you think back during PPP round 1, it was a mad dash of a feeding frenzy. Everyone was uncomfortable. Everyone was trying to get applications in. I know that mistakes were made. Lenders were trying to put these millions of applications through before funding ran out. And then PPP 2, it's gotten more relaxed. And so if you think of the PPP loan, there's a 6-month deferment on it. So there really is no need for a mad rush in order for borrowers to fill out and to request the forgiveness, because when they do ask for the forgiveness, it's going to forgive the principal and the interest. We're going to continue, as Eli mentioned, to learn new things and get additional guidance. So there really is there shouldn't be a sense of urgency that they have to get this done real quick. And I just think that that's an important comment, Eli. So I'm going to go to the next slide for you.
No, and I appreciate that, Bob, because if you look at the phase 1 of the funding, and that's a very good point. Phase 1 of the funding, we did more loans in those 14 days that the money ran out than we had done in the 14 years combined, right? So, the rush was real. People really, felt that they had to get this done, and there were a lot of mistakes, and not all the guidance was available. So one of the things you have to keep in mind is this additional IFRs do revisit the original application. So we do have the IFR on loan increases for seasonal businesses that the guidance was not available for. For partnerships, we have additional guidance available because the partners' self-employment income was not included in the original application. So keep that in mind. We do have that guidance out to lenders. It's published, and definitely, this next slide on the presentation is really, designed to go over the application part of it. And truthfully, we're just going to cover some of the more common types of businesses here, but it was great that this guidance was published, and it was right before the funds ran out on round 1. But for round 2, we still have well over $100 billion available, and obviously with the added clarity, we're seeing, some folks bringing back the money saying this is not for us. And we're seeing a lot of the smaller dollar loans. So the round 2 has a much lower average loan size than round 1. But again, the guidance on this next slide. Go ahead. Did somebody have a comment?
Eli, yeah, it's Norm. Jill Beresford has her hand up.
Sure.
Jill.
Are we supposed to be seeing a slide presentation? Because I'm not seeing it on my screen.
Okay. Are you in the Teams app, Jill?
Yeah. I saw it when Bob was speaking, but I'm not seeing it now when Eli is speaking.
Does everybody else have that issue? Jill, I actually sent the PowerPoint via email to, if you want to.
Okay, great. Okay. That's perfect. Thanks, Norm.
Okay.
But is everyone else, seeing the PowerPoint? I mean, I see it on my end, and Norm, I take it you see it too.
I see it.
Yes, I see it.
Yeah. Yep.
It may have
I see it.
Okay.
It may have reduced itself to a little box on the bottom where all the video heads are. So you might want to scroll through there, just click on it. It comes up full screen if you find it there.
All right. Well, thanks for that, Jill. So the guidance here as far as, how to calculate the maximum loan amount goes back to Form 2483, of course, right? So this was not available during the first phase of PPP funding, currently available. It was published on the 14th of April, so it's been around for a while. Many of you are well familiar with this. And as I said, on the next few slides, you will see, there's a lot of information. It's directly from that, guidance. And on this slide, there is a live link, for those of you that, have not seen it, you can click on that link on the presentation and it'll take you right to the document that talks about how to calculate the maximum PPP loan amount. Okay, so what we're going to cover here are self-employed individuals with no employees, self-employed individuals with employees. We're going to cover partnerships and S&C Corps. Okay, so that would be, I think, just for effective time, obviously, to get to as many questions and as much guidance as we can. So pretty straightforward. The self-employed individuals with no employees is the easiest of them all. Okay, for all this individuals would need to have their Schedule C completed, even if they haven't filed their 2019 tax returns. Okay, so this is a must, as you know it, and Line 31 shows the net profit amount for sole proprietors. That is the baseline you start the calculation on. So from there, if keep in mind, if a business has shown a net loss, then you know that they're not eligible. Okay, so this is where, the many questions have come back saying, well, wait a second, this is only for self-employed individuals. And we'll see it, later on with the different types of businesses. That's not the case, okay? Because they would have payroll expenses, even though they have a negative, net income. So, but there is a cap for self-employed individuals to $100,000. So any net income of greater than $100,000 will need to be reduced, and that's the baseline. So then you would find the average net profit amount by dividing that net income amount by 12. Okay, then multiplying it by 2.5. Okay, so step 4 is pretty much the same across the board, and this is because the guidance was published on the 14th of April. Okay, it talks about economic injury disaster loans that individuals want to refinance, and it specifically talks about loans that were basically approved up until April 3rd. Okay, we do know that an individual can have both an IDA loan and a PPP loan. So we do tell both lenders, and we're sharing with you today that folks that don't want to refinance, okay, their IDA loans into the PPP, they don't have to. You just have to keep in mind that those two loans have to be for two distinct purposes. Obviously, PPP loans are for payroll costs primarily. So an IDA loan cannot be, for payroll. We are also seeing how, on some approvals for IDA loans, the SBA Office of Disaster Assistance is canceling out PPP loans automatically. So let us know if you see that. If a borrower comes to you and says, I had both, I had a PPP loan, I have the money, but I just got this idle and my PPP loan got canceled, just let us know. We'll work with a lender to get it reinstated, okay? But going back to documentation here, and that's important. Again, that's one of the points that I do want to make, is that Schedule C is a must. It doesn't have to be filed for applying for the loan, but it needs to be fully completed. Okay, so we're talking 2019 Schedule C, and any 1099s, okay, need to be provided to the lender, obviously. It's important here to note that it specifically talks to non-employee compensation received. So that is box 7 on the 1099, okay? So 1099s, as you know it, can be used for various purposes, okay? Now, obviously, any business needs to have been in operation as of February 15th, 2020, to be eligible for PPP loan assistance. So obviously any documentation that can show that the business was operational, and that's all outlined on this slide over here. Bob, we can move on to the next one.
Yep.
All right, so here, self-employed individuals with employees. So this is somewhat different, okay? And from here on, we'll see this a common denominator of Form 941, which is basically for those employers with that utilize a payroll processor. That's a document that's provided on a quarterly basis, and pretty much everyone needs to have it if they do have a payroll processor. Okay, there are other means of calculating it, a little more difficult in the absence of the 941, but step 1 is somewhat of an elongated step, so it's got multi, sections in it. Again, it all starts again with the line 31 on Schedule C of the tax form 1040. A cap of $100,000 will be applicable if it's a net loss here. It's not a disqualifier. You just set that amount to 0. Okay, so then you go to the next step within this particular process, and line 5C on column 1 of form 941. So that basically would show contributions, wages and tips paid to the employees, right? And the language is exactly as it shows on the guidance here. So per the IFR, only individuals that have a principal place of residence in the U.S. would qualify. So whether employees or owners. So we've had that question asked many times. Obviously, we have gotten some guidance, but not, a clear-cut definition from the Treasury or the SBA. The next step here would be to calculate the contribution for employee health insurance, which is a covered expense, right? So that would come from, again, Schedule C on Form 1040, that's line 14. And then, we want to look at Schedule C again, line 19, for employer contributions to employee retirement plans. Now, both of these can be very complicated. So if you've got a client who's got a more complicated, more sophisticated plans, obviously you could use, any other documentation that they can provide. But the easiest way, the simplest way would be, Schedule C. And this is, this is the guidance, that the Treasury and the SBA have provided. Now, as far as employer state and local taxes assessed on employee compensation, truly what we're talking about here is, state unemployment insurance tax. Okay, so on the next slide, we do have information as far as documentation goes again. So if you look at the required documentation is the state quarterly wage unemployment insurance tax reporting form that will outline what what's covered on that part. So again, Schedule C, Form 941, and state quarterly wage unemployment insurance. Step 2, 3, and 4 are pretty much the same across the board. So once you figure out what the payroll costs are, you find the monthly average by dividing by 12. Then multiplying it by 2.5, that gives you the maximum loan amount. So on the next slide here, we do have partnerships and LLCs filing forms 1065. So as we know, some LLCs will file as a sole prop, so the information will flow into a 1040 Schedule C. In other cases, it will flow into a 1065 because of their pass-through taxation treatment. And some LLCs can file also 1120Ss as an S corp. So an LLC is somewhat of a unique scenario, and I'm sure you will see or you have seen that already with the different clients you've worked with. But going back to the partnerships, as I mentioned, this was one of the IFRs on loan increases deals specifically with the first bullet on this particular slide. So keep in mind here that for partners, for general partners, Schedule K1 and Box 14A is the only allowed self-employment or compensation for general partners. So if you, I don't know if you remember, we had some guidance early on saying that K1 income is not qualified. General distributions are not qualified, or I'm sorry, guaranteed distributions are not a qualified income. So the guidance that we currently have, obviously here on the screen, does make the K1 Box 14A, right, the net earnings from self-employment, which is subject to self-employment tax, makes that eligible. Guaranteed payments, however, are not subject to self-employment tax. So those are still not eligible, okay? Now, the specific line item, right, as reduced by any Section 179 expenses that were claimed on that tax return, will need to be reduced, right? It needs to be multiplied by 0.9235, okay, up to $100,000 per partner. So that takes into account the Medicare and FICA contributions, employee contributions of that general partner. So if you've got somebody who earns over $100,000, obviously Depending on that amount, you cap it at 100, then multiply it by 0.9235. There's a magic number, I think, at a 108 to something that gives you an exactly $100,000 per partner. Alrighty, so from here, thereafter, it's pretty much the same as what we had, with 941 forms. So line 5, C, column 1 is going to give us the wages and tips for the employees. Again, keep in mind, only those who are who have a principal place of residence in the U.S. are eligible. Okay. Now then we move on to tax form 1065 to find, employer contributions for health insurance. And then line 19 gives us that item. Line 18 gives us the contributions to retirement plans. Okay. Then same thing again with the quarterly wage reporting forms to figure out what the unemployment insurance tax is for, for that business. Okay, so moving on to the next page. Steps 2 and 3 again, we figure out the average monthly payroll by dividing, the figure on step 1 by 12, then multiplying that by 2.5 times gives us the maximum loan size. Okay, same thing here, as far as idles go. Keep in mind the idle advances. Okay, so the way you want to think of the idle loan is a 2-step process. So an individual that applied for an idle loan, they may have requested an advance, which was just checking the box and providing the account name, account routing number, and account number on page 3 of the idle application. So if an individual requested an advance and they got approved for the advance, that represents a duplication of benefits because that grant is going to be basically the advance is converted into a grant and then forgiven. So that amount will be deducted from the loan forgiveness. So whether the individuals, received it at the time they got the PPP loan or not, that makes a big difference here. If they did receive it, if they did receive the PPP loan prior, then you will be deducted at the loan forgiveness process. If they're applying now, then you need to deduct that from the maximum loan amount because again, it is a duplication of benefits and it's not allowed. So again, as far as required documentation here, we're talking, just a summary of what we went over. K1s, 1065s, and the quarterly wage uninsurance tax reporting form. So unemployment insurance, I'm sorry. Okay, so again, for every type of business, we do need to show that they were operational as of February 15 of 2020. So payroll statement, an invoice, bank statement, book of record. Here in Massachusetts, lenders are going to the Secretary of State. They're pulling a corporate, basically they're just making sure that businesses are registered and that registration is valid as of February 15th. But obviously to show that they're operational, you need some sort of, document that proves that. So, and obviously it needs to cover that period of February 15th, 2020. So Bob, we can move on to the corporations. So C Corps, S Corps, and LLCs that file 1120s. So very similar again, step 1, a little elongated of a step. We're going to look at gross wages and tips. That's form 941, same line 5C column 1, and you go from there. Now, keep in mind that we are capping all individuals, right, that earn over $100,000 to that $100,000 mark. And then on forms 1120 and 1120S, we're looking at line 24 and line 18 respectively. If they're an S Corp for health insurance contributions, retirement contributions on line 23 on an 1120, and line 17 on an 1120S. Again, same documentation required, including the quarterly wage reporting forms for the unemployment insurance tax. And on the next slide, we've got steps 2, 3, and 4, identical to every other, business entity type calculation. So,
Hey, Eli,
yes.
it's Norm again. Samalid had her hand up. Samalid, did you have a question?
Yes.
There
Yes,
you go.
hi, I did. And it was a couple slides back, but so in regards to the deduction of the EIDL advance from the forgiveness portion of the PPP, I mean, I thought from the and this is a question I'm going to get from my clients, so I want to know the answer. But if you have another answer later, I thought it would be deducted from the amount that they received on the PPP loan amount as supposed to be deducted from the forgiveness. Because basically what you're saying, if we sent you a couple $1,000s or whatever, up to $10,000 for your employees, now you have to pay it back from the PPP. If you got the PPP, now you have to pay it back at that 1%, or would it be at the 3.75%? So you see where I'm confused. I thought they would just deduct it from the amount.
I get it. Yeah, so that's why I was trying to differentiate between the idle loan and the idle advance. So you want to think of those as two separate steps. So an individual applies at the same time for both.
Yes, assuming that they applied at the same time for both, because the idle stuff came out first. PPP came later, or maybe they applied for both at the same time, but they didn't hear from the idle so they applied for the PPP.
Samala, so I think the way that to look at it, just really simple. So say you get a $100,000 PPP loan. You apply to the bank, 100,000 is approved as the forgiven amount. If you received a $5,000 idle advance, $5,000 will get deducted from the $100,000. So the small business will end up with basically a $5,000 loan on the PPP side because they got a $5,000 idle advance. You can't get a duplication of benefits, and you can't get grant funds twice. So the idle advance is a grant. The PPP loan has the potential to be 100% forgiven in advance. And so the advance portion would be deducted from the forgiven amount at the time that the forgiveness is reviewed and calculated and determined.
See, and I completely understand that. Thank you, Bob. I appreciate your explanation. The problem is that was not understood initially by many of our clients. So that's going to be a point of contention, but we can move on. That's fine. Thank you.
Yes. So for the client, the important thing to just point out is that you can't get a duplication of benefits. That's the way it is with all government programs. And so, so you're not going to be allowed to have grant funds twice. You're basically getting, free money twice. If we didn't deduct the advance amount from the forgiven portion, that's the way that it calculates to even it out, so that the small business is just getting the benefits once.
Understood. But what I thought it was like, in your example, it would be 95,000 instead of 100,000 on the PPP loan side, instead of giving them a full 100,000. But I understand with the timing being an issue, that that it would be hard to do that, to just deduct the idle loan advance from the PPP amount given, so that they wouldn't have to repay it. But
yeah,
that's it.
So again, right, if they received, the PPP loan before they got the advance and the lender didn't know about it, then it's going to be part of the loan forgiveness calculation. So that's really where it comes down to. If they knew about it ahead of time, then obviously it's something that's going to be addressed from the beginning, as we have it illustrated on the slides. All right, so
wouldn't you suspect that probably close to 95 to 100% of the loans, the idle advance is going to be treated at the time that the forgiveness is calculated and determined, and the deduction will be made at that point in time?
Yep, no doubt about it. So we can move on to the next slide.
So,
So-
Eli, just so you know, so we're at 1049. So
Mhm.
I'm not sure if we want to just go into the PPP forgiveness process, or whether you wanted to continue on with C Corps and S Corps.
So I want us to move on to the next slide and try to get as much of this done as we can.
Perfect.
Obviously.
So we're on the
So, yep.
PPP forgiveness process.
So PPP forgiveness process, again, this is information from the interim final rule published on the 22nd of May. Obviously, the 3508 form is a very important form. Highly advise that everyone goes through it at least once. We're not going to cover the actual form and the steps in the form, but just some tips and tricks, for you all. So first and foremost, lenders do have the ability, and some of them are using their own equivalent forms, whether online or automated, processes in place to make it easy for borrowers. So it doesn't have to be the 3508 if they have, some equivalent type of a format. But obviously the 3508 certifications all have to be, initialed and signed. So at some point in time that needs to be, completed, right? So there is a lot of information on the 3508, and the certification is a whole page of it, including the signature line. So once borrowers submit that form and the supporting documentation to the lenders have 60 days, okay, to review it, agree with it, ask for additional information if they're not, totally, convinced about the loan forgiveness, the way the funds were used, or the calculation itself. Then they submit it to the SBA within that 60-day period. Now, it will take the agency, given the large number of these loans, it will take us 90 days, up to 90 days, I should say, to get back to the lender with a forgiveness amount. So if you think about the 6-month deferment, it kind of adds up, right? So this dates should bring us, well before the 6-month window if we count for the 8-week, covered period as well. So keep that in mind. Again, we're going over on this slide. We're going over the idle advance as we talked about earlier. So that is going to be addressed at the forgiveness, step. So this is, again, any amount that's not forgiven. Keep in mind it's not the end of the world. So when I speak with small businesses, that's what I tell them. It is a 1%, loan. So amounts that are not forgiven, if they have the funds, they can pay it at once. No penalties. If they want to pay it over the additional 18 months, they can. So obviously the SBA is providing this program at a time when no lender was going to give them a loan, given that the businesses were, were closed and unable to basically borrow from traditional sources. But let's move on to the next slide. So once again, on eligible payroll costs, okay? So the distinction here, and this is again from the interim final rule, these are costs that were paid or incurred during the 8-week consecutive period, following the disbursement. So this is something that's new from the interim final rule. It was not on the original final rule. So there is a couple of surprises, I would say, on this IFR that was issued on the 22nd of May. So, but there is also some flexibility. So a borrower can use the alternative covered period, okay, for those who have, biweekly or bi-monthly or monthly, payroll periods. So that's available. And then allowable costs include payment for vacation, parental, family, medical, sick leave. And, if we dive down into, some of the specifics on the second bullet here on this slide, Again, we don't want to forget the cap of $100,000, okay, for the per employee. And, another thing that we have to also keep in mind is that borrowers can include estimated tips, bonuses, and hazard pay, okay, as a form of eligible compensation, okay, not to exceed that cap. Additionally, what we have in here is that, owner employees is actually a line item that is only on the Form 3508 and this IFR from May 22nd. So owner employees were differentiated, they were segregated on this particular form, and they're treated somewhat differently for a couple of steps on the next few slides. Self-employed individuals are limited to 8 weeks of their 2019 net income. So that's something we've always known. General partners, now this is something that was a new development, I would say. So general partners are calculated based on their 2019 net earnings from self-employment, as we talked about in the earlier slides. And it does say in the interim final rule that they're capped at that $100,000 if they own multiple businesses. So it would be $100,000 cap, if they had 2 or 3 partnerships and again, all is based on the net earnings from self-employment. So the other surprise here is that the cost for retirement or health insurance contributions for self-employed individuals and general partners are not eligible for loan forgiveness. Okay, so keep that in mind. And on the next slide here, non-payroll costs, somewhat more straightforward. The one thing to keep in mind is that those services must have been in place prior to 2/15, so that's one of the magic dates in order to be considered for forgiveness. What do we have in here? Interest expenses, mortgage interest expense, no principal payments are part of the forgiveness, of course. Rent and lease payments, and then what we have in here, we've got something which is I think some added clarity, I would say. So this costs can include past month payments if they're paid during the covered period, right? But they cannot include prepayments of services beyond that 8-week covered period. So that's a big distinction here to make. Obviously, the covered period does begin on the day of the disbursement, and the following 8 weeks are going to be the extension of it. 25% limit is what we've always known for the non-payroll costs. So that's that goes from the total loan amount again. So only 25% of the total loan amount can be non-payroll costs. On the next slide. So this is definitely one of the topics that we wanted to cover here. So obviously part of the CARES Act and the whole purpose and intent of this act was to keep people off of the unemployment rolls, insured, and on on the payroll roster. So businesses must maintain their FTEs during the covered period as compared to a reference period. So at the election of the small business owner, we're allowing a reference period, which could be between February 15th of 2019 through June 30th of 2019, January 1st of 2020 through February 29th of 2020. And for seasonal businesses, this was part of the IFR on loan increases. Any 12-week consecutive period between May 1st of 2019 and September 15th of 2019. So again, this goes to, at the election of the small business owner. I think there is some flexibility here. But the one thing to keep in mind is that the forgiveness amount will be reduced proportionally by the percentage reduction in full-time equivalents. Okay. So this is definitely added guidance that was not provided initially. And there was some flexibility provided with how to count FTEs. So a 40-hour employee counts as 1 FTE. If it's less than 40 hours, there's a couple of options. So you could count any less than 40-hour employee as a part-time employee. Okay, so you can count it as half FTE, or you can add up the hours and then divide them by 40 to calculate how many FTEs are in place for that payroll period. So now there was different guidance available from various sources, but this is the first that we hear it from the agency, as to what the definition of FTE means and how to calculate part-time employees. Okay. Now we do have a safe harbor for this particular reduction here on the loan forgiveness calculation. So borrowers would be exempt from the FTE reduction, if they do meet the safe harbor rule, which is basically bringing their FTE count to what it was as of February 15th of 2020 by June 30th of 2020. So definitely something that you want to share with your clients. You want to make sure that they're fully aware of it, and if they meet the safe harbor rule, then they're not going to get penalized. So on the next slide, now this is somewhat of a more complicated calculation, and both of these are done on the worksheet A, of course, and then carried over to the Schedule A. So maintaining employee salary and wages. So forgiveness for this particular requirement will be reduced by the dollar amount of any wage reduction in excess of 25% of the salary and wages earned between January 1st, 2020 through March 31st of 2020. So the calculation is performed on a per employee. So it's not done on an aggregate basis. So it's very, it's going to be very tedious. There's no doubt about it. And, the way that worksheet A is broken down, it's got a section for employees over that earn less than $100,000, and table 2 is for employees that earn more than $200,000. So do we have any questions up to this point? I don't see any hands raised, so we're good. Bob, if we could stay on that same slide that we were prior. So the calculation in here is actually of, I have highlighted and outlined in here the 3 steps to figure out, and it's pretty self-explanatory at this point. So, it's the 3-step process to calculate if there's going to be a reduction for maintaining employees' salaries and wages. Okay. Now, any employee that was used to count the FTE reduction, okay, does not need to be included here for this calculation. And only individuals with reduced salary and hourly rates would need to be included in this calculation. So keep in mind, for this step, it is a per employee calculation. And again, if a small business owner has used, an employee for the FTE reduction, they don't need to count that twice. And, if the hourly wage was maintained at the previous, quarter's rate, then you don't need to consider any of that. So moving on to the next slide here, we still have a few slides to go. Documenting requirements for safe harbor. These are actually some pretty good, tips. So obviously rehire and restore salary and wage levels by June 30th. So that's another magic date. So February 15th of 2020 and June 30th of 2020 are 2 magic dates here. So documenting any good faith offers to rehire and documenting those employee declines, to come back to work. So first and foremost, as we know it, this has to be in a written offer And it has to be for the covered period at the same salary and hours as their last regular pay period. So keep that in mind, very important, okay? So the written offer, has to include all of that information. The small business owners, they have to have a record documenting the offer, and if rejected, right, documenting how it was rejected. It doesn't have to be in writing, as long as it's documented. And obviously notify state unemployment office within 30 days of the employee's rejection. Now, there's obviously in the course of doing business, if anything were to happen as far as, changes in headcount, if somebody gets fired for good cause, if you have an employee that voluntarily resigns, voluntarily requests to reduce the work schedule, as long as you've got a documentation of that and a substitute for a fired employee, substitute for, voluntarily resignations, and, bringing in a part-timer to add up to the reduced schedule of an employee, that should work just fine. Okay, so all of those are allowed options. On the next slide, again, this is sort of a summary as to loan forgiveness, steps for employers. Again, we're talking here employers that do have payroll expenses that have employees on this particular slide. That is the more convoluted of the two calculations. So first and foremost, we're going to add total eligible payroll and non-payroll costs to get to the total amount of eligible expenses, payroll expenses here for the 8-week covered period following the disbursement on the loan. So it's very important. The clock starts ticking at loan disbursement. Okay. So we're going to calculate first and foremost any reduction in payroll, right? So as we talked earlier, hourly and wages greater than 25% compared to the prior quarter. Okay, and that's a per employee calculation. So very detailed, tedious calculation, I think, which a lot of small businesses are going to need help from you, from their CPAs, their attorneys, their, neighbor. We definitely don't want them to go to their neighbor. We want them to go to someone who, who knows what they're doing. So once we calculate the reduction in payroll, right, if it's in excess of 25%, we're going to reduce the total eligible expenses by that reduction. So, and that would be if there is such a reduction and safe harbor was not met, okay? So then the next step, again, as mentioned earlier, is calculating the percentage decrease in FTEs. So one is an amount, okay, decrease. The other is a percentage decrease in FTEs. Again, for the 8-week covered period versus whatever comparison period they choose, right? So it's at the election of the small business owner. So then we apply the percentage decrease in FTEs to eligible, total expenses. And again, if that's applicable and safe harbor was not met. And then the next step would be to calculate whether payroll costs are at least 75% of the eligible costs. So on the next slide, here we know that the loan forgiveness amount is the lesser of, okay, the original loan amount, okay, the eligible payroll costs divided by 75%. So that is mandatory by, the CARES Act, that there's at least 75% of the loan spent on payroll costs. Now that is subject to change. The legislation that was passed by Congress, that's the part that they're looking to, to remedy, because small businesses are complaining left and right, as you know, and that may be a little, too burdensome on them. But as things stand today, that's the requirement. So then, eligible total expenses after the hourly or salary reductions, right, and FTE reductions. So that would be, the way that you get to the bottom line on the calculation form. Now, for self-employed individual, owner compensation replacement is again limited to the lesser of 8 weeks of their net profit, from 2019, or $15,385 here. So keeping in mind that all covered expenses are limited to the extent claimed or entitled to be claimed on their 2019 taxes. And always assuming that, for any utilities, for mortgage interest, for leases and rent payments, those were in existence prior to February 15th of 2020.
So
I think that brings us to the
Eli,
end
if
of the
you could just
presentation.
talk for
Yep.
just a quick minute on self-employed, because we know of the potential hole there as far as a self-employed individual, the maximum loan amount that they could get, it's a little bit over $20,000. The maximum forgiveness that they can get is this $15,385. So, for your clients out there, this may come as a surprise to them, because the maximum loan amount is higher than the maximum forgivable amount. And so depending on the sole proprietorship, the self-employed, they are potentially looking at a loan that they're going to have to pay.
That's correct, Bob.
Did
I think Sam
someone
will-
have another question?
Real quick, Eli, have you heard of situations where a bank has miscalculated the PPP amount and a business owner has run out of the money in less than the 8 weeks?
We've come across many situations where the lender has, calculated the wrong amount for the PPP loan. Absolutely. But those that have figured it out, whether the borrower, or the lender, they've remedied it. So there is a way to fix it if it's a lender issue and it has not been reported on the 1502 report.
Okay, because I have a client who ran out of the PPP money 6 weeks because the employee benefits were not calculated in the PPP loan amount, and he can't reopen yet because the state won't allow him to. So he has no income to pay the additional 2 weeks. So maybe we can talk offline about that particular client, because it seems like, I don't know if he's the only one that's in that situation, but they wouldn't give him any more money. The bank won't give him any more money. So
yeah, just send that individual over, the contact over to us, and we'll reach out to the lender. But I think we've reached the questions, part of the presentation. I know we're a little over the time allowed, but obviously this was a lot of information, and I hope some details, for you all to do what you do best, better.
So one suggestion, so I listened to a PPP forgiveness webinar that Mark Haywood was on, I think it was last week, and it was hosted by the Hartford Business Journal. There was a CPA on it and also a lawyer together with Mark Haywood. And I thought it was a really good session. It was an hour long. And so there were quick presentations by the three, and then it went into a sort of like a lightning round Q&A. And so I'd love to do some webinars together with whether it's the CPA Society in Massachusetts or other organizations to bring in partners as a complement to the panel. And yeah, so we're all ears, and we certainly want to continue to try to reach out to organizations and to talk to small businesses on PPP and forgiveness. But again, this is a moving target. It is very fluid, and there is pending legislation which is potentially going to change how we're going to operate. So again, we're training on what we have right now as far as what the rules are, but this very much is a fluid environment.
Can business owners pay themselves hazard pay?
So business owners, again, based on the that most recent IFR and the 3508, they're a separate segregated category. So if any reductions were to happen to their pay, it's really not going to count towards any of the the disqualifiers. The increases, on the other hand, I don't think they will also help, right? So we know that they're not going to count for meeting the safe harbor and for any of the decreases on the loan forgiveness. But as far as, you know, paying them more, I really haven't come across it. Bob, any takes on that?
No, nothing to add to that, Eli.
This is Dennis from SCORE. Just a question without getting into the hypotheticals, but early clients that have gotten PPP, is there going to be any retroactive change if they have to go through the forgiveness and let's say the weeks get expanded as one of the hypotheticals that is being talked about? Will that go retroactive to somebody, or if they've had pressure or whatever from their lender to get their forgiveness loan in and it comes after that 60-day grace period? Any thoughts on that?
Dennis, we're going to have to see what the legislation ends up at and what gets signed and what the rules associated with that are. But as I mentioned earlier with my comments, you know, so there really is no urgency on the part of a small business to be asking for forgiveness at this point in time. And so it's probably prudent for folks to wait and to see what happens within the next week or two and how things might affect their PPP loan that they have outstanding.
Hey, Bob, this is Tim Nelson.
Hey, Tim.
Quick question for you. I'm getting this a lot, especially since people know legislation's coming. So I get my PPP loan. I'm not open. Do I pay my employees? Or do would you just hang on to the money and wait and see what the legislation is before you take people off unemployment?
Well, the rules as we have them right now, Tim, is, you know, you have the disbursement of the loan, the 8 weeks, that's the guidance that's out there now. So, you know, we don't know what is going to come down and what's going to change, but, you know, we know that, you know, folks are trying to get that 8 weeks extended. They're trying to get the 75-25 split to be adjusted, but we're going to have to wait and see what shakes out. So I really can't provide you any guidance on something that's just proposed, but it is just a reality, Tim.
That's going to be really difficult because people have already paid all their employees, and they should, based on new legislation, they should have waited. And I wonder if they're going to do anything about that. I'm not saying you have the answer, because I'm sure you don't, because nobody does.
Well, hopefully they're going to take things into account. You know, this is a program that has been rolled out on the fly, and you know, definitely lots of moving parts. And you know, let's hope that, you know, anything that does come out with new legislation is not going to adversely impact folks that have existing PPP loans out there. And
yes,
so we'll have,
rules.
Yeah, well, you know, we'll have to again see what happens and what shakes out. But I know we went 15 minutes over the hour that we had planned for this, and Eli, fantastic job, you know, going through what is a pretty complicated topic and doing it so thoroughly. So kudos to you, and thank you for putting that together and delivering the presentation. And to all the partners that are here this morning, you know, continue to shoot questions to us, and you know, we'd love to partner with you on some different webinars and trainings. And even though, you know, as the head of our leadership from field operations says, you know, it's not bad to say we don't know the answer, and so rather than to speculate. And so, but we can train people on what we do know, and you know, there are things that you know, we talked about today that I think there might be some things that we went over that the partners didn't realize. And so, again, we're together with you and trying to help small businesses. So I appreciate everything that you're doing, and definitely reach out to me personally if I can help with anything.
Looks like Dick Bowling has a question.
Yeah, can you hear me?
Yes, Dick, go ahead.
So I'm gonna score, and one question we've gotten is, so you're a self-employed individual, and you've gotten PPP loan. You don't want to take the owner compensation. You just want to pay rent with it. No, it won't be forgiven. Can you then get unemployment if you don't use it, knowing it's just going to be a loan you're going to use for rent?
I'm not sure why that person wouldn't be paying themselves with the money, seeing how it is going to get forgiven. And you have, so what is the type of entity that you were talking about? Was that a sole proprietorship?
Yeah, it's just one person, right? Sole proprietorship. I think she just was trying to get her rent paid, and then she can get unemployment to cover her compensation. So if she can do both, knowing that she has to pay back the PPP at 1%.
So again, Eli, definitely chime in here, but a self-employed with no employees, the maximum loan amount is the line 31 on the Schedule C, multiplying that by 2.5 times. What we are suggesting that they do is that they pay themselves a weekly paycheck out of that PPP money. Again, for a self-employed individual, the forgiven amount is the 8 weeks divided by 52 of what was on the line 31, with no forgiveness for rent or utilities or interest payments on a mortgage. And so the scenario that you're talking about, the small businesses looking to do the opposite, and so 100% of the loan would not be forgiven in that scenario that you're talking about. So Eli,
right.
any thoughts on that?
Yes. So depending on how much, I have had situations where, small businesses have applied for a PPP loan, and then they have also applied for, unemployment assistance, right? So it became available, the third week in April in Massachusetts. And, I've had those small businesses that have reached back out saying, my unemployment is greater than what I would get, on a weekly basis from my PPP. Can I pay it back? And they have, and I've said, yeah, by all means, if it works out better for you. And I've had some that came back and said, I only qualified for, $300, and I would, I will not take the unemployment, and I'm going to go forward with the PPP. So I think it's, that is definitely something that you can advise folks on if they have not, right? If they have not used those PPP loan funds, and especially if it was within the safe harbor period. Now that we're out of the safe harbor extension, and some of those loans have been reported on the 1502. So the 1502 report is what the most banks had to do, had to report these loans if they were fully dispersed, and they had to do that by the 29th of May. So that was this past Friday. So now that most lenders have reported them, it's a little more difficult to cancel these loans. They can definitely pay them in full. They can definitely go back to the bank with the funds, but they have been reported to the SBA as a loan, and an individual that has a PPP loan is ineligible for unemployment assistance. So that's the one the one word of caution there.
They are ineligible for unemployment if they have a PPP loan.
That's right, because it's a duplication of benefits.
Even if they don't use the PPP for compensation.
Well, that's what the PPP is for. It's to replace payroll.
Except it can be used for rent. It can be used for rent too, though.
Yeah. So only if rent is one of those covered items, right? So if it is, a business entity that has claimed rent in their past returns, or they're entitled to claim rent, or lease expenses. So that is one of the covered line items, but
right.
Not applicable to a sole proprietor, especially if they have not claimed it in years past.
Okay, thank you.
When we get questions from folks on unemployment, we're directing them to go to unemployment for the answer. And for the guidance from them. So we're talking to small businesses about are the rules associated with PPP and how the program works. But if they have different scenarios and want to figure out whether they're entitled to partial unemployment or unemployment for themselves, again, we're asking them to go to unemployment to get the answers. But I know in the proposed legislation, they're trying to take into account, the time period where folks are getting the extra $600 benefit on unemployment. So they're trying to address that through the paycheck, the PPP Improvement Act. But again, we're going to have to wait and see what the rules are if and when the legislation does get approved.
Okay, thank you.
Any other questions before we wrap up?
Hey, Bob, this is Oresti.
Yes.
So the scenario presented earlier about the sole proprietor and so anyway, we might be talking about the same person. So just to expand on that. So this person has no intent to use PPP funds other than rent. They also have no intent to seek forgiveness. So it's a loan. So I talked to Ken Messina this morning, who I'm doing a presentation with tomorrow on unemployment and PPP, who's from the state and has expertise in unemployment. He didn't see it as a foul or a possible fraud in a sense that it's a loan that they're paying back. So if a business sought forgiveness, then it's free money, then he would see that as a fraud from the side of unemployment. So if a business doesn't seek forgiveness and they're paying back this money, I don't see that as an issue. Do we see that as an issue? Even though they're,
I would just say that the application that the small business made when they applied for the PPP, there were different certifications that they made. Right. And, so one of the certifications is that they were going to use the money as it was intended. And so, whether it crosses any line, I'm not going to be able to comment on that. But right. When they applied for the money, saying that, this is how the maximum loan amount is calculated. There is the certification in there that they're going to use the money as per the rules. So, Eli, any comment on?
Yeah. I will just add that on the interim final rule, right, and this goes all the way back to the first IFR published on April 2nd. It does say that, an individual who gets a PPP loan is ineligible for unemployment assistance. So the rules are the rules. I mean, it is not it's not a 1% loan. It's a PPP loan, right? So you don't want to think of it as a bank loan because it's not. It's an SBA-backed, loan with 100% guarantee that the bank would not have made were it not a PPP, prospect.
Thank you.
Anything else from the group? Diane Darling, were you ever able to join?
Yes, I'm here. How is everybody?
So, so glad that you were able to join the webinar. So why don't you say a quick hi to the group before we close out? But I told folks a little bit about your background, but the floor is all yours, Diane.
Sure, thank you. I'm holding my iPad in the sky because I couldn't get on my computer. Welcome to everybody. It's a delight to be here. Bob and I have crossed paths for many years, and I was an award winner with the CWE many years ago. Big passionate person on helping small businesses, having run one. Interesting to be on this side of it and do what I can. And Bob, I was listening when you were talking about the Massachusetts CPA group. I'm more than happy to reach out to them and do some things like that to see about getting some of these webinars or other things that can be useful through my network and get some people, on board to ask some of these, to just get more people engaged. So let's continue the conversation. I'm delighted to be on board.
Great. Thank you, Diane. Okay, well, I think we can wrap up. And Norm, as always, thank you for your expertise with teams and helping us to organize this. And but again, it's good to see everyone's face, even though virtual, and to see some smiles. Nancy, I love it. So nice big smile out there. So, but keep up the good work, and so happy with the team that we have. And